Toll Brothers putting the offense on the field, which you wouldn't think that'd be offensive, but it is.
Who says it's not offensive?
I just don't think about home builders as being an offensive, traditionally an offensive name, but right
Definitely,
now,
bro. Consumer discretionary, son. Hey guys, JC Perez here, founder of allstarcharts.com, and I am joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
I'm going to put that on my business card. Esteemed colleague. That's my title.
You are very esteemed of all of my colleagues. You are one of the more esteemed. But we got, listen, shout out to Tony Dwyer. I listened to a lot of great technicians over the years and a lot of great strategists. I pick up a lot of quotes. I always like to quote the best ones. Tony definitely in that category. You know what Tony likes to say is when your offense is on the field, call your offensive plays, right? And then it's funny because I don't think you know Tony Dwyer. You guys, you don't know Tony, but you kind of alluded to a similar sort of thought process, right? In your own way.
Yeah, well, look, I don't want to take the credit for it. When we had our analyst meeting yesterday, after you hopped off, me and Straz and the boys and girls, we were kicking around some more about the idea that I had for an options trade yesterday. And Straza gave me a little dressing down. He said, bro, he's like, we got to be more offensive than this. He's like, this is the environment, man. Like that's a good trade and that might work, but there's better trades out there. We got to be more aggressive. And I was like, all right, well, what do you got? And Toll Brothers is kind of where we landed on this one, and I liked his thought process on it.
Definitely. Well, if I know Straza is looking at this monster base, right? Not to mention that home builders in general, the ITB is the home construction, the XHB is the home builders, and they're very different because when you think home builders, you think you might be buying stocks of companies that build homes, but you are not. It's a more equally weighted index. You're getting all kinds of stuff. Like for example, you're getting an equally weighted, you're getting like Fortune brands, and you're getting the types of stocks that tend to, Sherwin-Williams, things that tend to come with people who are buying homes and they're spending money in some of those other places. Home construction, on the other hand, is much more tilted, and the larger components are the actual companies that build homes, things like D.R. Horton, Lennar, NVR, Pulte Homes, right? So here we're looking at Toll Brothers, a company that's exactly what they do with a huge base. So, you've got some relative strength coming out of home builders. I keep seeing people keep telling me that there's this housing crisis and the interest rates and the lumber and like all this stuff. And I'm like, all right, but then home builder stocks keep looking great. So I don't know what to tell you.
Right. It's kind of crazy. When I talk to people, friends of mine, who live around me who aren't involved in the stock market, but they are, looking at maybe buying a house or they're thinking about refinancing their house or whatever. People talk about house stuff, right? You know that. You live in the suburbs. And if you listen to what they're saying, everyone's like, oh, it's a terrible market. And there's real estate's going to be impossible for the next few years. Like, I'm going to lose money on my house, blah, blah, blah. All of that may be true, but the stock market is telling a different story.
Yeah, I mean, or maybe housing stocks keep going up and housing prices fall. I mean, I don't know. I'm not a fundamental guy, but like I'm open to whatever. Like I don't know anything about real estate. My home might be worth more or less. I hope more, but I have no control over it. Obviously, what we can control is profiting from the upside, whether it's home builders or biotechs or whatever it is that's working at the time. And at the same time, managing our risk and making sure that we don't lose too much. Again, with volatility where it is, we can go all the way to June. We're in, the early parts of January. We got a long time for this to work, Sean.
Yeah, what I like about this trade is you hit on one piece. The volatility is low, so that means it's much more affordable than normal to buy calls to express a bullish bet. So that's one piece of it. But the other piece is a playoff of what we were talking about prior about the narrative out there amongst Joe Q public, right? Like nobody wants to believe.
What's a Joe Q public?
I'm just making up names here. Joe Q Public, Jane Doe. Does that work for you?
Fair. Okay, go.
So nobody wants to believe that housing stocks is a viable investment with that backdrop. So with volatility being low and with the move we've already seen in housing stocks and with the potential for the broader markets to be a tailwind for everything, Straz and I were talking yesterday. It's like, it feels like a stock like Toll Brothers could be vastly underowned right here. And so this could just be getting started. And so with the cheap options, with the ability to play it cheaply, the risk or the potential reward versus the risk sets up really nicely, because what we were saying is, if you look at that chart, that high that you see there corresponds with like the end of 2021. So basically we'll call that the last cycle highs, but that was December 2021 there when it got up to about $70. If we get back up to that price or higher, then we're looking at least a 5x return on the calls that we buy today. So, at least a 5x or greater return on risk. I like those odds. I like stacking those numbers. That it's a low probability that that'll happen, but you only need a few of those to work out, and you come out ahead over the long run. And that's the bet we're making. You doing some chart art on the fly there? What are you doing?
You like that? You see how I do that? Boom. I wanted to show the consumer discretionary ETF, the equally weighted version, because since we're long consumer discretionaries, we're buying consumer discretionary stocks in the case of Toll Brothers. I think it's important to understand that people are like, oh, consumer discretionaries are underperforming. Tesla and Amazon got smoked. Large cap growth has been underperforming. But if you look at the equally weighted consumer discretionary index, it's actually the best performer since the market bottomed last June. That was almost 7 months ago. And those are some pretty juicy returns. So on an equally weighted basis, discretionaries are basically flat during that period while everything else is up. But when you equally weight that and you sort of remove that exposure to Amazon and Tesla that have really driven consumer discretionaries down, you look more broadly at the space, it looks great. And a lot of the impressive behavior, some of the impressive behavior certainly coming from home builders, as you could see here, showing a ton of relative strength. So you're kind of, you're stacking the chips on your side, having the wind at our back. This trade may or may not work, but I would put it on 100 times out of 100 because you've got your trend at your side, momentum, relative strength, and from a top-down perspective, this is a good place to err, in my opinion, if you don't think you have enough risk on, which clearly in the meeting after I left yesterday, Straza felt as though he felt that was right. And I don't necessarily disagree. If you feel you're in a position where you don't have enough risk on, this is a great way to do it, where you're not having to use up a lot of capital. You're not having to take on too much risk. Because like I always like to say, I'm a limited partner in the trade, like a hedge fund. I'm a limited partner. I can't lose any more than I put in. We got in, what, at $2?
We paid $2.10 for the calls, for the
$2.10.
June 65 calls.
$2.10. Cup of coffee, right? Come on.
And,
we have till June.
Right. And that's a worst case scenario. That's the most we could lose. But you've got the number 50 there highlighted on the screen. And that 50 is important for a couple of reasons. Number one, that level has price memory, which you could see clearly on this chart. I mean, that price memory goes back 2 decades, right? It's been resistance a couple of times. It acted as support briefly. We feel like that is still a significant level, and you can't tell on this chart because this is such a long-term chart. But on a more zoomed-in daily chart, 50 was the level of support that the Toll Brothers hit last month. So we think, from a shorter tactical perspective, that's the level we're going to watch. So if we see a break below 50. That's going to invalidate our trade, at least for now, and we will look to exit it and, hopefully not suffer a total loss on the trade, which I don't think we will, as long as it doesn't take forever to get there.
Yeah, no, I love how Sean reiterates that there is a second layer of tactical risk management in the trade. Although I always like to reiterate, in a worst case scenario, because it's all about being able to sleep at night, in a worst case scenario, you can't lose more than the call is worth, right? You're a limited partner. I love Sean's additional layer But to me, it always comes back to bigger picture. Am I going to be able to sleep at night? I don't have to worry about that. It's already implied in the trade. It's gone when I write the check. If I could save some and still be, and if I could be wrong and still save some, that's all the better. So I want to reiterate that. And then finally, let's say in the off chance that we get it right, Sean, right? Here we are building a position on something that we think goes higher, right? So high that we're going to take half off the table at 420.
Ooh, I like what you did there. Smoke them if you got them. So
the bottom line is we want to take half off the table when it doubles. It just so happens that we paid 210. So the double is 420. Haha. And from there, we just let it ride. And hopefully, we're sitting a few weeks down the road, maybe a month from now, being like, hey, we took half off the table. There's nothing we can lose. And now we have an extra 4 or 5 months of a free call option. That's the position that we want to be in. It's nice when we are in that position, which, happens pretty regularly. So I think this is going to be another one of those.
Well, this is one of those situations where we hope that offense wins championships.
Oh, I like it.
Speaking of championships and offense, whose offense is showing up this Sunday, huh?
Oh, here we go. Huh? Here we go.
Dolphins, Bills, 1 p.m. Sunday.
You don't have a quarterback. Put me in, coach. What I would give to be the quarterback. I'll be slinging it to those guys. You kidding me? They're so fast. Just throw it as far as you can, JC, which is not that far, but.
Well, I'm hoping for another one of those epic snowstorms in Buffalo, but I don't think we're going to get one this weekend. Good for you.
So one for us. I guess we'll see. All right, guys, listen, we are buying the Toll Brothers TOL June 65 calls for approximately 210, taking half off the table. If we can get rid of them for 420, letting the rest run all the way towards June for an added layer of risk management. If at any point we get a close below 50, you want to call it quits, that's totally cool. That makes sense to us. As always, I'm JC Peretz with Shawnee. Oh, I got to hop, guys. Love you guys.
All right, take care, everybody.